So write an answer for question number 3B. Answer of question number 3B. We already have read the question, so I'll start dictating the answer. First point, spot price of security rupees 473 is irrelevant. Second, on 15th of November, comma, for December futures contract is entered upon. In that write down A, number of contracts 15, B, futures price 491, C, transaction is to buy the security, and D, lot size is 50 shares. Third, we have been given closing futures price for December, comma, from 15th to 19th November. Full stop. Working note number 1. Calculation of maintenance margin. In the write down, maintenance margin per contract into number of contracts. Maintenance margin per contract is rupees 600, and number of contracts are 15. That comes to rupees 9,000. This is the first working note. Working note number 2. Calculation of the profit or loss on daily basis. Try to complete the table on your own till 19th. Giving explanation about the profit or loss calculation on 17th. We understand that, say, basically 488 is the price, 491 was the original purchase price. So difference between both of them is a loss of 3 rupees. So now loss of 3 rupees is required to be recognized, and the profit which has been recognized so far 12 is also required to be taken back. Whatever the profit which has already been credited 12, that is required to be recovered, and the loss of 3 rupees is required to be recognized. Can we say that the total 15 rupees is required to be recovered? How can you recover that, say, 15 rupees? Simply it is the difference of 488 and 503, and difference of that is the automatically the loss that you will be able to incorporate, which is an amount of say rupees 15. So now we'll incorporate the prices of 18th and 19th. On 18th, we can see that the price is 485. So that becomes the sale price. And this becomes the purchase price. So again, unfortunately, there is a loss of 3 rupees. So 485 minus 488. So loss of rupees 3 into 50 into 15. That is the reason so that is the way we are required to make the computation. So 485 minus 488, loss of 3, multiply with 50 into 15, that is 2250. On 19th, 485 will become the purchase price and this will become the sale price 499. So there is a profit, that is 499 minus 485. So it is 14 rupees is the profit into 50 into 15. Okay. 499 minus 485. So it is 14 rupees is the profit into 50 into 15. That comes to 10,500. And based on that, so we'll have the final answer, that is the margin account. Write down answer this much and try to complete the remaining on your own. Now on 18th, let us see what happens. On 18th, there is a profit or loss. Unfortunately, there is a loss. How much is the loss? 2250. So on 18th, I am writing a loss. The amount of the loss is 2250. $12,000 minus 2250 is 9750. 9750 is less than 9,000. No, it is not less than 9,000. So is there any requirement of the margin? No, there is no requirement of the margin, because after deducting the loss, if the balance is below maintenance margin, only in that case the payment of the margin is required to be made. So on 18th, this is the closing balance. Neither you are allowed to withdraw nor you are required to make payment of any deposit. On 19th, is there a profit or loss? Profit. How much is the profit? 10,500. So profit is 10,500. And this is the way we will have on 19th the closing balance. Closing balance of 19th is 20250. Now I am giving an additional explanation to all of you. Of course, the question is over, but there is an additional explanation. Be careful to understand it. One thing is that you need to have understanding that whatever we study right now is the same way that the market is working. The stock market is exactly working the way we have understood. It is not at all anything different. Giving an example to you like this. Suppose on 19th, at the closing price of 499, the trader is squaring off his contract. Suppose at this price he is squaring off his contract. Then in that case, the trader will be given an amount of rupees 20250. Trader will be given an amount of rupees 20250. and with that say he will be having the profit or loss as what we understand technically. See, in order to understand that say we are supposed to prepare a cash book, simple cash book that say we prepare. Column number 1 is date, column number 2 is receipt, column number 3 is date, and last column is the payment. See, there are very few receipts and payments that we have. The contract was entered upon on 15th. At that point of time, initial margin was paid of 12, that is 12,000. So on 15th date, 12,000 is the payment. On 16th, there is a withdrawal of 4,500. So on 16th, there is a receipt of 4,500. Okay. Then on 17th, there is a payment of margin 6750. Now on 18th, you square up the contract. On 19th, you square up the contract. So 19th, you will be given 20250. So we understand that you have received 4,500 plus 20250. So you have received 24750. 24750 minus 12,000 minus 6750. So you end up with the additional receipt. Can we say in a simple language it is a profit? Yes. You have a profit of an amount of 6,000. Now let us verify this profit. See, initially the transaction was entered upon to purchase the security at 491. Now in between you have entered into the square off of the transaction in which we are going to sell the security at 499. Because in between you square off the contract. So what is the amount of the profit or loss that you have? The amount of the profit that you have is 8 rupees per share. What is the lot size? Lot size is 50. That comes to I think 4,000. 4,000 into 15. That comes to an amount of 6,000. That is the way the profit of 6,000 rupees can be cross verified. You may write down this cross verification only for understanding. Of course, it is not forming part of the answer.